In this video today, we are going to be covering AMD and Palantir. This changes everything. We're going to be reviewing the trending stocks of the day, and we're also going to be taking some of your stock requests here at the end of the show. So be sure to stay tuned to that. Let's jump into this. AMD and Palantir, this changes everything. Now, this is a 31-minute video. You guys know I like to talk over all these, so I'm going to run this at 1.5 times speed to see how much we can get through.
You got to be flipping my flapjacks. Palantir drama is back, folks. Oh, baby. 10% plus the stock went down here today. It's down a bunch more after hours in this one. We're talking about what happened to Palantir stock. Where's the stock going from here, in my opinion, right? So we'll get into all that at the top of this video. A lot of different opinions out there, right? Including I posted this on X here today to try to hear, what the bears are saying and the bulls are saying in regards to Palantir. Interesting times. From there, I want to react to this video from Antonio, who has a little bit of a smaller channel out there, a little over 8,000 subscribers he had, but he had put a great video together in regards to AMD here. AMD's new $200 billion AI business that I wanted to highlight here today and react to this one with you guys. I always appreciate it when folks have smaller channels, but they can sometimes post some really valuable content. And I think this is a good example of a piece of content that I think is really, really valuable out there. So looking forward to reacting to that one, sharing my opinions and perspectives on that here today, folks. Action-packed video. Appreciate y'all being here on the reaction channel. I missed it earlier. We are at 77,777 subscribers, and I missed taking the screenshot by 4 subscribers. I was so mad, but anyways, appreciate you guys being subscribed here. Thanks so much for being here. Additionally, if you're looking to apply to join private stock group, private wealth group, 1000xstocks.com, pin comment down there. You can click on that and fill out a form so you can get you access to that maybe this weekend or next week. And additionally, the second pin comment I'll put down there is if you want to follow me on Instagram. I don't post a lot of photos and things like that, but you know what I do? I do a lot of Instagram stories. Like if you follow me every single week, I post a lot of different Instagram stories. So if you want to follow me on there, I'll put that as a second pin comment down there if you use Instagram. Okay. So Palantir got hit with a double decker today. This is a double decker, folks. So first off, Pentagon budget cuts, talking about cutting 8%, right? Which shouldn't come as a surprise. Like, here's the thing. If you're going to cut any major expenses, if Doge is going to cut in any major way, you've got to either eat into defense budgets, right? Or you got to eat into Medicare, Medicaid, those sorts of things, or you got to eat into Social Security. That's where all the money's really spent. Like everything else is child's play money. It's little stuff. If you look at where the budget's actually spent, it's defense. And it's like, government programs like Social Security and Medicare and those sorts of things. Okay. So at the end of the day, like if we're really talking about making big strides here, we got to cut defense, right? Now, there's a couple different ways to read this. One is that's, you can see it as a TAM that's less big for Palantir to go after in the government space, which is true. Like if there's less to go after, there's less to go after. The other way you could look at that is, well, Palantir might not get as hit by this as, let's say, Lockheed Martin or some other defense contractors that have much bigger businesses. Because you got to understand, like Palantir in the realm of like how much money they make from the defense sector compared to some of the other big giants, it's actually a very small amount. That is something to keep in mind. So Palantir could keep growing their defense business even if the government, let's call it, is shrinking how much they want to spend. That's just something to keep in mind. It's no guarantee, but it's a possibility, right? Second way I would kind of think about it is a lot of us that are invested in Palantir or not invest in Palantir because of the defense side of the business. Like that's cool. Like, but that's not how I'm investing in Palantir. Like, if you look back to when I was buying the stock very heavily back in 2022, what did I tell you guys? I'm buying this because of the commercial opportunity. I was buying it because of what Foundry could do, right? And how they could change companies. And then AIP just put everything on the juice, right? And so my thought process about Palantir is if this company was going to become a 10x company, 100x company, whatever, right? It was going to be basically on the back of commercial business, not on the back of government business, and not on the back of defense. So that's another way to keep I think a frame around this subject. But I can understand it's being seen as a negative because at the end of the day, Palantir's growth rates are starting to get up there, right? And we could be talking about 40% plus revenue growth next quarter. And listen, any potential hitting of the growth rate, a few quarters from now could definitely, hammer the stock.
So far, I don't have any comments to this. I mean, honestly, he's just throwing facts. He's not throwing the you have to buy every dip, right? So far, he's just throwing facts. I don't have anything against what he's saying.
Pretty darn hard, right? So every bit matters in this game at this point in time. It's like a game of high stakes poker, right? Second, the Alice Carp sales. Now, this to me mattered actually more than the Pentagon budget cuts. Now, to the market, they don't look at it like that. The market cares much more about the Pentagon budget cuts. Me personally, I care more about the Carp sales, right? And talking about, selling up to $1.2 billion worth of stock over the next 6 months, right? And my opinion perspective is I don't love it. I don't love it. Carp's already sold shares, right? And to dump another 1 billion plus, because you got to understand where I always love to listen to what the bears have to say on a stock I own and the bulls have to say. I don't just tune out one side. I'm too mature for that. I've been in this game 16 years. When I first got started on the market, bears offended me. I would get very emotional, like, oh, you're saying something bad about my stock. Nowadays,
I don't know, dude. I think you're still pretty emotional on your stocks. Let's jump over to the Palantir chart real quick. Looking at this chart, right? This is what you want to see. And I have been very bullish on Palantir. You can go back to every video that I've talked about Palantir. I've said this is the most bullish setup I've seen in everything, especially running up into earnings. Now, a couple points, right? First, this sell-off right here, I said this is a great point to get out. Anytime you close under the 20, anytime you close under the 20 period moving average, that is a everything goes to cash sort of situation for me. Now, it did turn around it did turn around. We can all agree to that. Let me put this here. But there's no guarantee that that happens at any point in time. Okay. So being a risk first trader means getting out when there's an issue, and you can always get back in, right? That you could close right here under the 20 and then get right back in with the close back over the 20 and still have gotten all of these gains, all of them right there, without having any hesitation, any worry, any issues, right? Now, a couple other things is that we do cover Palantir in OVTLYR, and we did get the sell signal back on February 13th, and that's what I had marked right here, right? OVTLYR would have got you out literally 2 days before the top, like outstanding move right there. But it also would have kept you in for this huge move up, right? It had the buy signal on December 23rd, right? So if I go to December 23rd, so there, actually I need to move this over. A 46% gain, right? So you could have got in, you could have got right back out if it didn't work for you, but then you could have held it all the way through once it crossed back over those moving averages. Now, as a couple of people have mentioned in the chat, I went through this yesterday and talked about how if you just used one moving average, right? A pop over the 50 moving average and then back down, like this is how the game is played, right? There are times where you're going to make a couple bucks. There are times where you're going to lose a couple bucks, right? You might win or lose a couple dollars here and there. But when you are in the trend and it goes over, show you what I mean by that. When you're in the trend and it goes over, right? The close right here, all the way up. Where's the first close under the 50? Right there. Right. Hang on. I'm going to have to move this around just a smidge. First close under the 50. The 147% gain just on that, right? Just on that. That's it. Just using one moving average or following these buy and sell signals with OVTLYR, right? And in fact, I wanted to show this real quick. OVTLYR had 1,042% gain following buy and sell signals on OVTLYR, on Palantir. But what's more important here is capital efficiency. So what is capital efficiency? I want to do this real quick with a spreadsheet to show you exactly what I mean. So capital efficiency is basically daily returns compared to buy and hold. So buy and hold has a little bit higher at 1,245% versus OVTLYR at 1,042. But capital efficiency here, let's say that we're in Palantir, PLTR. OVTLYR returns, was it 1,042? Buy and hold at 1,245. Okay. Invested in time in the market, 57%. So the other 43% of the time, you don't have to be in this stock. You could be in something else that's working, something else that's trending. Okay. And so that gives you, if I did my math correctly, oh, hang on. How many days did we get total? 279 days, 493 total trading days. So this was 279 and 493. 493. So the capital efficiency is 1.5 times because your returns per day that you're invested, right? How much returns, how many days in the market at 3.7% versus 2.5%. So an outstanding return on its own, but because you're in it in less time, the capital efficiency is much higher. Does that make sense to everybody here? So that's what this number is here. And I really like being able to compare that, right? Because even when a stock has buy and hold at 1245, you can actually do better if you base it down to a daily rate of return. A daily rate of return is what this is trying to measure here. And by having these buy and sell signals, your daily rate of return is 1.5 times what it would be if you're just buying and holding.
I go out of my way to hear bearish theses now and bearish thoughts. And do you want to tell me, I'll tell you one of the bearish thoughts around Palantir. One of the bearish thoughts around Palantir is Alex Clark pumps and pumps and pumps the stock, right? Says this and says that. And what does he do? He dumps shares on the back of retail shareholders who are dumb enough to keep buying the stock, right? And that's what bears say time and time again. If you ask Palantir bears, they'll tell you exactly that. Company trades a ridiculous.
I don't think you should be a bull or bear on anything at all. I don't think so. Because what does that do, right? If you decide that you're a Palantir bear, for example, and price is just knocking you over, right? If price is just like murdering you day after day after day, why even be a bear, right? Why even be a bear? this is something I learned ages ago. It's like, if you're going to take a stance in the market, take your stance, right? If you're going to be bullish, be bullish. If you're going to be bearish, be bearish. But be flexible. Be flexible. Because there are tons of people who were ultra bullish on SoFi, and now they're on the other end of it, and they're like, oh, I'm still ultra bullish on it. And you can be, but you don't have to be, right? If the market's telling you that it's in a stage 3 topping pattern here, you don't have to be bullish anymore, right? If you loved AMD, if you were so bullish on AMD over here, right? If you're so bullish on AMD over here, I get it. It's trending up. But then when the data tells you something else, and it just goes down and down and down, there's no reason you can't be flexible. And maybe people feel that they have to make a choice and that they have to stick with that choice forever. I don't understand why, but you don't have to. You can be wrong. You can lose a couple bucks here and there. Adapt. And then when it runs, you can be there for the big gains when they come. So calling yourself a bear, calling yourself a bull or whatever, I think it's just setting yourself up for failure, because then you're emotionally tying your identity. Yeah, you're emotionally tying your identity to what a stock price does. Who cares what the stock price does? It's going to move. The choice is either you can be with the move or you can let the move run you over. That's your choice.
Goes valuation, cart pumps it, retail pumps it, and then he dumps his shares right on retail's heads, right? And so that's an argument that's made, and it doesn't look great when then Carp's going to sell $1 billion plus of shares, right? It doesn't look great. And when he's already done big sales, it's just not a good look. It's not a good look, right? It's kind of like, it more proves like the bear's point in regards to that more than anything. So to me, that's actually a bigger thing. I don't love it. It is what it is. Like, it is what it is. Like, we got to deal with it, right? Now, additionally, and the third thing, talking about valuation, stock being way overbought. Yeah, there's no doubt. I mean, and that's what I've been talking about for last.
I disagree. We've all heard the terms overbought and oversold, and I use it too when it comes to market breadth, right? When market breadth gets really high, you could consider that overbought. When market breadth gets really low, you could consider that oversold. We're kind of in the middle right now. But the stock is going to move in one direction because, let me pull up my slide here, because you've got all these buyers coming in, right? You've got all these buyers coming in screaming it has to be bought. But it's only when the sellers come through is it now overbought, because the sellers are starting to step in, right? You can't put a cap on how far a trend is going to go. I mean, Palantir is a great example of that. You can't put a cap on how far it's going to go. And a lot of people have lost a lot of money betting against Palantir and this giant move right here. This is the stage 2 uptrend that everybody wants. And there were people saying when it was down at $22, oh, there's no way it could go to 40. There were people at 40 saying there's no way it can go to 60. People at 60 saying there's no way it can go to 80. People at 80 saying there's no way it can go to 120, right? It basically went up $100 a share in the span of like 6 months. That's crazy. But that's what you want to see. You want that stage 2 uptrend. And you can measure it with the outlier trend template, the 10 over the 20, price over the 50. Now it's not always a straight line like this, but that's what you want to see here. But to call something overbought or oversold means that and granted, I really should never use that phrase, that you are saying that there are no more buyers to buy. There are no more sellers to sell. That's what that means right there, that there's no more buyers to buy or sellers to sell. So it's not necessarily overbought ever. It's only when the buyers have stopped buying and the sellers start selling.
Last couple months in regards to Palantir. The thing
also, I'm sorry, I should have interrupted him again, but like that goes back to people saying when something's overvalued, overpriced, whatever. The market costs what it costs to get in, right? Are you going to walk into the bullhorn store and say, you know what, $17 is overpriced, and walk out when you want to own the bullhorn? You might, but then at the same time, you might not ever buy the bullhorn, because $17, it may go up to $37 because everybody's like, oh my gosh, I have to have bullhorns now. Chris has made these the most fun things ever. And he uses them at soccer practice for 9-year-olds as well as YouTube videos. So the bullhorns are like in short supply because more and more buyers are coming through, right? More and more people are saying, I got to get me a bullhorn, right? To make it a tangible thing here, right? So I don't know.
Is when you got a stock and that's just an incredible momentum uptrend there, like, just because it's overbought doesn't mean it can't get more overbought, right? And just because the P is pretty insane doesn't mean it can't get more insane. So that's something to kind of keep in mind there, right? Now, I was asking for other people's opinions in regards to this and kind of what they thought. Some people cared about it. Some people were kind of indifferent about it, right? The thing that's important to understand is there's many reasons why a CEO would sell shares or an executive would sell shares, right? It could be Carp's looking at it and he's like, this valuation is ridiculous. I need to sell shares, right? He could be looking at it from a perspective of most of my wealth is tied up in the stock. I need to diversify some wealth, right? He could.
I think that's exactly it personally. High net worth individuals, they're different, right? They put most of their assets in, single stocks like this. Now they're going to have some real estate. They're going to have some other interests like this, right? But most of it, probably 80%, 90% is going to be tied up in a stock like this. And, he's probably going to be borrowing against those shares for income. And that's a strategic play that most people can't do. But more than likely, like, he just wants some money. I mean, like, Jeff Bezos sold billions of dollars out of Amazon so he could go fund his Blue Origin, right? People need money, and it's okay if they sell out of it. You don't have to, like, even billionaires need some cash sometimes. You don't have to look at it like it's a fine, a detective. You're Detective Pikachu out here trying to figure out what's going on under the hood.
Could be looking at it as he wants to use some money to found another company that's totally different than a Palantir. There could be a lot.
There you go, your Blue Origin story.
A lot of different reasons. You could want to go buy a mega mansion or a few mega mansions for that matter, right? There could be 1.2 billion different reasons why a CEO or an executive sells a stock, but always do remember, there's only one reason that a CEO or executive would ever buy a stock, and that's because they believe it's going to go higher, right? But when it comes to sales, there's a lot of different reasons. So that's just something to kind of factor in there and kind of keep.
David said exactly that. Insider buying is much more relevant than selling.
In mind, my opinion is, this will definitely dent Palantir a bit for a while here, right? There's no doubt in my mind, at least, that this will dent it for a little bit. And the reason being is you got the double decker, right? If it was just one, if we just had to deal with the Carp sales, 1.2 billion over the next 6 months, or if we just had to deal with the, Pentagon cut and defense budget, that would be one thing. But the fact that you got both on a stock that already had a massive valuation, that's where it starts to actually, the momentum starts to fade. And you got to understand there's a lot of momentum traders in this, a lot of swing traders in it. And the more this one flushes, the more it will flush, essentially, because you get more and more just saying.
Buyers beget buyers, sellers beget sellers. The market cycle continues. Right. I had somebody in the comments the other day say, Chris, you keep showing the same slides. It's so boring. Yeah, because this is what is the market. This is a historical representation of these people. Yeah, it's that because it's true. Right. The names change, the buyers and sellers change, but the human behavior is the same every time.
Saying abandon ship, right? So you got to understand there's some people that have been buying Palantir 124, 125 recently. If you're a trader and you were buying the stock the other day at 124 because there were 125, guess what? Stock's at 107 right now. Oh boy, what happens if this?
Okay, so here's I wanna mention something since he mentioned this price up here, right? What happens is that people get so excited when we're hitting these market tops, and I'm not saying that it's about to crash back down, but we did just see this, which somebody corrected me in the comments as well. This is actually the wall of worry. I called it the slope of hope. I had them backwards. The wall of worry, because you're worrying if your investment's going to go up. And then the slope of hope is when it's going down and you're like, boy, I hope it comes back up. So I had them backwards. When you're climbing the wall of worry right here and you reach the top, there's something called the greater fool theory. And this is what happened to NFTs, right? You had so much thrill and so much euphoria and people buying those stupid monkey pictures at the top. And now they're trying to sell them for anything that they can sell them for when they paid hundreds of thousands of dollars for a monkey picture. The greater fool theory is there's always a greater fool willing to pay more than I just paid today, right? The issue is that there will be a time when you hit the top. I've done it. You've done it. There will be a time where you do that. But here's where a smart trader comes through. Is if you're wrong, take your loss, move on. Take your loss, move on, and live to trade another day. Live to trade another day. Because if you just bury yourself into this stock and say it has to come back up, I'll hold it for the next 8 years. I mean, you could be looking at something like let's go to PayPal. You could be looking at something like PayPal here, right? Let's go to monthly charts. It'll be a little easier to see. Right? There were lots of greater fools right here. Lots of them. And you shouldn't be afraid of that. Who cares? Just take your loss and move on before you really turn into a fool all the way down here. That's what I'm trying to get across here. This is this. And it's the same thing over and over. because it repeats itself over and over. So let me introduce myself real quick. I know I'm just a random guy on the internet, but my name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. Of course, we will continue to look at those trending stocks in just a couple minutes after the video, but go ahead and subscribe if you haven't already. Well, let's get back over here.
This goes down to 100. If it goes to 95, like stop losses will be hit left and right from the trader community. And you got to understand that, right? So, and I also think, from some of the longs, this might be the first time that some of them consider maybe taking some profits because it has been a heck of a run in Palantir. And for some of the longs, they might not have been taking profits, and this might be the first kind of shake up to be like, okay, you know what? Let me maybe take some off the table. It's been a heck of a run. So, we'll see what happens. But that's kind of my opinion and perspective on what will transpire from here. Alrighty, let's get into some AMD.
To the best investor.
What I was saying earlier when the audio wasn't working right, I was saying how meta would it be if he's going to do reaction videos on other people? If Jeremy did a reaction video of me doing a reaction video of him, that would be hilarious. He and his team chickened out twice at the meetings that we had set up, ghosted me twice. So I don't know, but let's see where this goes here.
Investing podcast in the world. In today's episode, I'm going to be talking about AMD's new and secret $200 billion business that the market doesn't even know exists at the moment. The market is basically ignoring the vast potential of...
Okay. I'm going to rank his video a -73 already. Not necessarily Jeremy's. I'm actually going to rank this one decently high. This one, 0, negative, because the market knows everything long before you do. Long before you. Don't even act like you have insider knowledge that someone in the market has not already started to buy or sell based on. If you're telling me that you know better than the market, then what you're saying essentially is that not only does the market not care and not want that business, but the price has been going down in AMD. Not that you can see it, but the price has been going down on AMD. Let's go to OVTLYR. I know that worked earlier. The price has been going down on AMD for ages now. So basically what you're saying is that this secret business, this $200 billion secret business, the market already knows about it, and they already said they don't want it.
AMD's FPGA technology, which paves the way for an uncontested $200 billion business. This would be the second time Lisa Su decides to pursue an opportunity that the market doesn't understand. And the last time she did that, a decade ago, the stock went up 25x. So let's get deep into it. Since acquiring Xilinx, AMD has been positioning itself to lead what is projected to become a $200 billion plus market.
One of the things that I don't think AMD gets enough credit for is how diversified their business is and how much more diversified this business is going to get over the next 5 or 10 years. NVIDIA, and I saw an argument made around NVIDIA recently, and there's no shots at NVIDIA. I'm just pointing out different things I see out there. But essentially the thought was, NVIDIA is so dominant, obviously in the data center market right now with all these big tech companies, right? And we're kind of talking about exposure and how much exposure you get to NVIDIA and how concentrated NVIDIA is on that specific segment, right? And I understand that could be seen as a positive for right now, but I'm like, as soon as these companies, let's say, start worrying more about cost, and that could be as soon as the back half of this year in 2026, suddenly everybody's going to look at NVIDIA and see that as a major risk because they're going to be saying 88% of your business or 90% of your business is all concentrated in this one area that all of a sudden, let's say in the back half of this year or next year, companies start worrying about costs a little bit, right? And so AMD's got a very well diversified business with a lot of major growth opportunities, and AMD's going to end up, in my opinion, position themselves where they're going to be the one to likely undercut the market a bit. And so if these companies are looking for a more affordable solution that is still extremely high end, I think AMD is going to win a lot of business there, probably starting in the back half of this year and going all the way into 2026, 2027, 2028. So I just don't think AMD gets enough credit for that or enough respect. But I think if we fast forward 18 or 24 months from now, it'll be a completely different story. And I think people will understand the point I just made here.
By the end of this decade, AI at the edge. This strategy is powered by FPGAs, field programmable gate arrays, the breakthrough technology brought in through the Xilinx acquisition that enables chips to dynamically reconfigure.
A lot of people forget AMD bought Xilinx, which was a very fast-growing company when AMD bought it. Lisa Su and AMD, they didn't just spend all that money just to spend all that money. Xilinx has to have some incredible technology, which is why AMD was willing to make that purchase. I was looking into Xilinx.
Okay. So the first half of the video, he's talking about just stuff going on with Palantir, right? Now I feel like he's pumping AMD. Like I feel the pumpage. Do you feel the pumpage too? I feel the pumpage. A Jeremy hammer. Hey, Joe Love said, Chris said, buy this monkey hammer meme coin and you'll be a millionaire. No. I said you'd be a billionaire. Manny, what are you looking for when it comes to market breadth when picking an individual stock? Good question. So I go into OVTLYR and this is the full stocks market breadth. And so since Manny asked, let me jump over to the master key here. Market breadth and sector breadth. So this is the market breadth right here. This is all the stocks we cover, the 2,500 we cover. Then I'll switch down to like financials because I'm a financial guy. And then if the financial sector is also bearish, then I'm not interested as well. Does that make sense? And then we can go over to, I think I saw somebody say that wasn't real estate, it was energy. I think I heard somebody say energy was starting to look good. Oh yeah, look at that. So if the market breadth had been bullish, right? And then I saw the sector breadth being bullish here, then I would start to look in the energy sector for new opportunities. That's what I'm trying to say there. So excellent question for Manny.
Xilinx before AMD bought them, actually, quite a bit before they. And I thought Xilinx had some pretty amazing tech. I was just trying to figure out, like, what's their long-term TAM and things like that. And the next thing you know, all of a sudden AMD ended up, rumors started, and then AMD bought it
in real time. This property promises to enable FPGAs to run neural nets more efficiently in smaller devices. Looking ahead, AI will expand beyond data centers, integrating into billions of edge devices. Running AI on these devices demands specific capabilities, namely superior energy efficiency and versatility. FPGAs excel in this regard, far surpassing other chip types, and Xilinx stands as the undeniable leader in this domain. The runner-up by a wide margin is Altera, which was acquired by Intel in 2015. With Intel struggling to remain competitive across the board, AMD Xilinx is now blue skies ahead. As a result, the acquisition has positioned AMD far ahead of its traditional rivals, effectively making it nearly impossible for them to challenge AMD in this rapid.
This feels like another AMD pumper video. We don't need those. We don't need those. You outliers don't need those, right? Now, let's take a look. If we zoom in micro level on AMD, micro level, right? We did have a cross over the 10-period moving average. What does that mean? Let me go to my cheat sheet here. The 10 EMA is an indicator of a short-term trend. So if it crosses over and closes over the 10 EMA, that actually means that it's a short-term bullish trend. Now let's also look at the 20, a reversion to the mean after an extended trend, right? So it's come down and it's going back up, reversion to the mean on the 20-period moving average. So if we zoom out just a little bit, you'll see AMD has multiple times come and kissed, maybe even taken on a date. It hasn't gone past first or second base here for AMD every time it's got up to a 20-period moving average, right? I don't think it's going to again. No, I could be wrong. And that's the thing. As a trader, be okay if you're wrong. Be okay with that. There's nothing wrong with being wrong. There's nothing wrong with being wrong. That could be a new catchphrase for us. There's nothing wrong with being wrong. There is something wrong if you decide to stay wrong, right? There's nothing wrong with being wrong. So we'll see if it continues on this trend, but I think the more likely scenario is it gets monkey hammered right back down to where it came from. But I don't know. I could be completely wrong, and that's okay. So I'm going to stop that video here. We're going to look at trending stocks in just a minute. I want you to evaluate. I want you to give me the value that you would have ranked this video here. And I'm actually going to rank it slightly higher than normal. I'm gonna toss off the AMD part because I feel like it's not worth it. Don't pump anything. There's no reason to do that. Hans D. Brucker. Finally, I got to catch you on a live session. I love your channel. Learned a lot. Greetings from Hungary, from a Dutchman. Greetings from a hungry Dutchman. I'm glad you made it, my friend. Sign of upcoming recession, idiots making money. Oh, we did talk about that in a recent video for sure. All right, we got some 2s, some 3s. 60 people need to hit the like button. I agree. No, 282, because that's what we show right now as on the live stream. Need to hit the like button. Thank you very much. Would you buy AMD if it met your requirements? No, I wouldn't buy AMD if it was with your money. Unless it was trending upward, right? Unless it was trending upward, unless the market was trending upward, unless the market breadth was trending upward, right? Unless we had the master key unlocked. Where's it at? Here. Unless we had a buy signal on the SPY, the market trend was trending up, market breadth was trending up, and also the tech sector trending up. There's a lot that would keep me from buying AMD right now. A lot. But that's okay. I don't have to, because other people will. Oh, good quote. Hang on. I don't have to do that right now. I don't have to, because while I do nothing, less experienced, lesser disciplined, and less skilled investors are laying the groundwork for your success. They'll build the bases and we can buy the breakouts. So let the other people who are less experienced, lesser disciplined, and less skilled figure out where those bottoms are. All right. Let them be the people who end the stage 4 downtrend, build the stage 1 sideways trend, and then start the stage 2 uptrend. And then you can just ride that roller coaster up. Then you can just ride the best roller coaster in the world up. All right, so I see some 3s, 6, 4s, 5s, 2s, 5s, 1s. I will personally, and my vote doesn't matter any more than yours. We're all on the same team here. I will give it. I'll give it a 5. I'll give it a meh. I'll give it a meh. I know, it's crazy. That's probably the highest ranking Jeremy video I've ever had. I'll give it a 5. Although Victor's like, no, give him a 1. George with the 2.2. Good morning, Christopher. Sick name, bruh. Sick name. Got some 4s. Awesome. You told us not to touch SMCI. I just made 100% this month with it. Did I say not to touch SMCI? That doesn't sound like something I would say. That doesn't sound like something I would say when it's moving in that direction. In fact, tell me what video specifically I said not to touch SMCI. Congratulations on that move, my dude. Congratulations. But if your trend is going up, by all means, go for it. We talked yesterday. You can go watch that other video about how you could have traded out of this, out of the order block, and kept nearly all of that profit right there. It was nearly the top of that order block. So definitely go watch that video. But let's continue on. But before we get too far, you can still save 64%. We actually are going to continue that deal, and it's just 82 cents a day for the annual pass over on OVTLYR.com, and it is legitimately saving 64%. If you're already on a monthly trial, you can upgrade. Just shoot us an email. We'll take care of the rest. And let's look at some trending stocks. All right. And of course, like I say, if I told you to stay away from SMCI, show me the evidence. Bring the receipts, my friend. Bring the receipts. Let's look at NBIS. NBIS is the #1 trending stock of the day. NBIS. Okay. So interesting to look at right here. It looks like earnings may have just happened or they're happening after today. But this is what can happen. We're down how much from here to here? 10%-ish yesterday. So this is what can happen with earnings. And this is why I don't like to trade earnings, right? You've got this run up here, your 10, 20, 50 all across north. And I love to trade up into earnings, but I don't like to hold at earnings. And this is the exact reason why. Let's do the next one here. Palantir. We already talked about Palantir. Down 6% this morning, right? Now, if you had held it right here, if you missed the sell signal, that's okay. You could have got out right here at that close. It may have closed right under the 10, but holding and hoping is not a strategy. You need to determine where you're going to get out, where you're going to get in, and know exactly what you're going to do before putting on the trade. So if you are still a Palantir holder, I mean, you're probably making money at this point here, unless you bought right at the top. But I think the big move in Palantir may have ended. It might continue on, and I could be totally wrong, and I'm okay with that. Let's look at Alibaba, and then I want you to start putting your stocks in the chat. Look at this power move, right? Big difference between those two. Hang on, what was that again? That was NBIS had earnings, and it got monkey hammered down, right? It got smashed down, and then you get to Alibaba right here, 10% after earnings, and it broke right on through that order block, right? This is what you want to see, but you don't. This is not guaranteed, right? Your 10, 20, 50 all across north, and then you can see the order block right here gave it a little bit of rejection, and then bam. If it closes above this, that order block's gone. I would give it 3 days at this point here to see if it's a gap and go or a gap and crap, right? Lyft is a great example of a gap and crap, because it went up, it gapped up, and then it went down like basically right after that point. So drop your stocks in the chat. Let's take a look at a few of them. If they're covered in OVTLYR, OVTLYR covers 2,500 stocks. We will look at those in there as well. Let me close a couple tabs here, and let's get busy. Okay, first one. I'm going to have time for. Let's call it 5. Intel. James wants to look at Intel. I know Intel's been getting a lot of excitement right now. Okay, Intel. Big move up. 13%. Let's look at Intel here. INTC. I noticed this morning these were running a lot snappier, about 6 seconds start to finish, which is pretty cool. We're making some huge upgrades. In fact, just yesterday, Mahesh was showing me the new charts that are coming through, which they're going to look just as good as TrendSpider. So I'm really excited about that. We got that buy signal on February 13th. That's what we were measuring right here. And you can see it went from, okay, let's paper trade this out, okay? paper trade this out. February 13th, heat map of G12. So if I were trading G12, I would look for a 10-point spread, so G22 to get out. Now, that's just selling into strength. That doesn't mean you have to. It's just what I would do. So a G12, then it went to G16, then it went to G18, and then G23. So yesterday was my exit day. Yesterday, February 19th, my 39th birthday, would have been the exit point of this. Now, of course, not hitting the top, but nobody's ever going to do that. 6.5% gain in the span of 3 candles. I would be very happy with that. That's that's exactly how I would have traded it. And I know I would have traded it that way because the moving averages were crossed up, and this is my exit criteria. So it's not guesswork. It's exactly what I would have done. Let's go to another one here. From the Warfish, OBDC. OBDC. Okay, got your 10, 20, 50. It looks like earnings already happened. Earnings really didn't do much to this trade, or this stock, which is pretty unusual that nothing happens. But let's look at OVTLYR. Do we have it here? OBDC. All right, Blue Owl Capital Corporation. Let's go to the 6-month view. And looking at this, we can see that buy signal came on February 14th with a heat map value of G10. The heat map values go from 0 to 50, and it shows you how greedy people are getting or how fearful people are getting. So a G10 was the opening, and I would hold that for a 10-point spread personally. So it's at G10, then it went to G13, and then it went to G17, and today it's at G22. So today is an exit signal for me. Now, I only trade at the end of the day, so wherever this lands at the end of the day is where I would be getting out. If we were to have followed it at February 14th to now, not much. I mean, oh, this is a $15 stock. At 9 cents, 58 basis points right there. That's okay. I mean, let's say we got out at the open, 1.5%. That's a lot better. But I would hold this until the end of the day because that's how I trade. You do you. But that's how I would have traded the OBDC. Let's look at the crowd. CRWD. Over here. By the way, I like how none of these have been falling knives. I like how none of these are Jeremy stocks so far. Okay. So you've got a really strong uptrend here. You're 10, 20, 50, right? Let's look at this. So, I mean, market cycle perspective, right? You've got your stage 1, your stage 2 was really short, your stage 3 was very short, your stage 4. And then looks like it built a stage 1 that was drifting upward. Maybe another stage 1 right here. And now it's looking like it's in that stage 2. So let's look at this. If it closes under the 10, I would get out today, no matter what, because that's a rule of mine. If the 10 EMA is broken, I'm out. But let's look at the buy and sell signals here. Oh, we got a sell signal. What day did we get that sell signal? It might have been today. Yeah, it looks like it's today. Let me zoom into the 6-month point. Oh, yeah, for sure. So buy signal came November 22nd. Sell signal came today. Today. It hit a heat map value as high as 38. So a sell signal today, close to close. Right now sitting on a 16% gain. Not bad. But if I were holding CrowdStrike, 2 things. A close under the 10 plus a sell signal on OVTLYR. Yeah, I wouldn't be holding CrowdStrike anymore. CYBR. This is number 4 of 5. CYBR. And I'm just picking these at random. There's no favoritism here. All right. CYBR. You got a couple bullish order blocks built. Your 10, 20, 50 is looking really strong as well. Let's look in OVTLYR real quick. CYBR. Got some news over here that caught my eye. 4 cybersecurity stocks to buy for stronger portfolio security. Let me refresh the page. we go. Got a sell signal. Let me zoom in this way. Got a sell signal a couple of weeks ago. All right, we're not trying to capture the very top. If we can, that's awesome. But January 6th to February 3rd or 4th. February 4th. January 6th to February 4th. January 6th. February 4th. Let's say if you held that close to close, 8% in the span of 19 days. That's pretty great to me. You can see the greed has gotten pretty deep. We're still continuing up that greed ladder there. G31 out of 50. So more than halfway up there. My thing, and the reason that I get shorter spreads on the G values as it goes up, is because it's like a rubber band. The further you get with these G values, the more that they can snap back, right? And so for me, that's why I give them less and less of a leash the further greedy it goes. So it looks really good. It closed under the 10 right here, though. That would definitely be an exit point for me. Last one of the day, grab. Last one of the day, grab. Okay, great. Okay, I'm really glad you pulled up grab. So let's look at this. You got your 10, 20, 50 all across north. And then this right here pulled up into this order block, got rejected. Now, this order block was created here November 20th. And let's count how many times it's rejected price since then. So 1, 2, 3. And now this is the 4th. And it's got pretty hard, handily rejected right there. So what I'm saying here is not, why don't you hold it and wait for it to come back up and then get out right there, right? I would never tell you to hold and hope. What I would say is watch what's going on in this stock. If it closes under the 10, I would get out. Let's look at grab on outlier if we cover it. We cover 2,500 stocks, so it looks like we do cover this one. We do have a sell signal, though, right now. The greed value, it went pretty fearful, but it's been coming up. Greed value right now at G21, so 21 out of 50. Here's how I would trade this if I didn't have outlier. A close under the 10 is an exit. But if it doesn't close under the 10, let it run, right? Let it run. There's an old adage of cut your winners short and let your winners run, right? My feeling is cut your winners short and let your winners run out of control. Okay, let your winners run out of control. That's the best feeling in the world when your winners are running out of control. So if it doesn't close under the 10, it might continue on because the trend is still upward right now. And if it comes back up to this order block area, I would absolutely be looking to take profits. Quick question. Why trade at the end of the day? A, I don't want to be stuck in front of a computer all day. Don't you have other things to do? I know I do. But the real answer of that is the liquidity is highest at the end of the day and at the beginning of the day. The liquidity at the beginning of the day is all over the place. At the end of the day, we're basically figuring out where the ending price is going to be. So you're getting in the ballpark right there, right? Whereas at the beginning of the day, as you know, the volatility is all over the place. Nobody wants to deal with that. So liquidity, number one, is paramount. And number two, lifestyle, right? If I'm only trading at the end of the day, then I don't have to stress what all these intraday moves mean. They don't mean anything to me until I'm at the end of the day. But of course, you can trade anytime that fits you and your lifestyle. So whatever works for you, go for that. And of course, tell me what you're trading in the chat. And remember that only price pays. Be sure to come back tomorrow. We'll help you save time, make money, and start winning with less risk together as a team. Now, YouTube is going to pop up a couple recommended videos. I recommend you watch one of those, and I recommend you have a fantastic day.